What's up everyone, Nate here, and needless to say, there has been a crazy amount of money that has been flowing around our economy over the past 2 years. From trillions of dollars being printed by the Federal Reserve to record spending in just about every market, money is basically everywhere in our economy. And so far that has affected everything from supply chain issues to the Great Resignation. People around the country are trying to use their money and get some of that trillions of dollars that has been floating around for themselves. And all of that has led to one of the biggest quarterly gains in GDP that our country has seen in about 40 years. And what that means for our economy and GDP going forward is that the American people are about to become a whole lot wealthier. More specifically though, we are about to see one of the greatest wealth transfers in American history. And actually it's starting to happen right now with millennials soon to become the wealthiest generation in American history. So today I want to talk all about this generational wealth transfer that is happening in our country right now, what that is going to mean for our GDP and our economy going forward, and how all of this money circulating around right now affects us today. But before I get into all of that, I need you to do me a quick favor and smash, hit, or destroy that thumbs up button below. It's completely free and it shows me that you want to see even more videos just like this one. Thank you so much for doing that. Now let's talk all about the GDP. So the most recent GDP numbers for Q4 2021 were released today, and they basically showed that our country's gross domestic product actually rose at a rate of around 6.9% in Q4 2021. Overall, our entire economy grew by around 5.7% in 2021, which is the biggest we've seen it grow in a single year since 1984. GDP is basically just a fancy way of saying how much value a country is actually producing and then selling throughout an entire year. So basically, if your GDP is going up, then your country is making a lot more money. What that basically means is your country is starting to grow. You see, when the United States prints money, they don't just print it for no reason. The United States government prints money because it needs its economy to grow so it can produce more things. This production is essential to the survival of a country because if it doesn't produce enough goods and services for the country or for countries abroad, then it's basically going to fail. So you want to continue to see your GDP grow year after year, and it's typically pretty slow. When you have an economy that is as complex and diverse as the United States is, it's going to have a lot of changes both at the macro and micro economic levels. But like 1984, there are a lot of big changes that are happening in our economy right now. The US economy is starting to explode once again, and the reason for this is because the United States is producing more because they need to produce more. You've probably heard that the United States and the rest of the world is facing supply chain issues right now. But one of the reasons for that is because there's so much money in our economy. People are able to purchase a lot more things. And what that means is that businesses need to make more too. But part of the reason why GDP has gone up so much in such a short period of time is because of inflation. People are purchasing more, and even though they're getting more, it doesn't really mean that our GDP expanding is a good thing. People are paying more, so it's not really a measure of how many things people got, it's just a measure of how much money was actually made. And not to mention that for the past previous quarters in 2020 and in 2021, people were spending a lot less money because of the pandemic. People couldn't go out and spend money, or they were only spending money on necessities, so it was hard for people to spend in general. But once our economy began opening up and people were incentivized to go out and spend, well, now things exploded. We actually saw a short recession in 2020 because of the pandemic, but that recession ended faster than any recession in American history because the Federal Reserve turned the money printer on and went brr. They essentially printed their way out of a recession. They gave the American people trillions of dollars to go out and spend. As the American people started to spend, our economy was lifted up, even though people weren't working. All of that led to a massive amount of wealth being built in the United States in an incredibly short period of time, because some people didn't just spend this money, they went out and invested this money. And you gotta remember, when the United States government prints money, they don't just print money for a specific group of people, they're printing money for just about everyone, including buying Wall Street, and other generations like Gen Z, Gen X, and the baby boomer generation. Which is exactly why we're starting to see a massive generational wealth transfer in the United States right now, the biggest in history. 1984 and 2022 actually have a lot of similarities, at least in a financial sense. Inflation in the early 80s in the United States was pretty high, and those years were dominated by the baby boomers. Approximately speaking, if you are a baby boomer, you were born between the years 1946 and 1964. So basically, as a lot of these baby boomers were starting to enter the workforce and started to amass wealth and spend their money, the nation was entering an interesting time. That time was the 1980s and high inflation. Plus, the United States just a few years prior was getting off of the gold standard. No longer would all of our US dollars be backed by a commodity like gold or silver. Now the United States government could print as much money as they want, which means our currency immediately became inflationary. And the only way for our economy to survive at this point was to start printing more money. Not only that, but society was accelerating as well. More people were being born, which means more resources and more technology that needed to be advanced. And not only that, but baby boomers, at least today, have an advantage over a lot of millennials, Gen Z, and Gen X for that matter, just because they were born at a specific time. I mean, just for instance, if you started investing in the stock market 30 years ago, the Dow, for instance, was only at around 871 points. Now that was all the way back in 1982, but today it has grown to be well over 34,000 points, and that's after multiple crashes like in 1987, 2001, 2008, and of course, 2020. That means for Americans that were born in the 40s, 50s, and early 60s, they have now amassed a whopping $35 trillion in wealth. But here's the thing about humans. They don't last forever. So those people who are age 65, 70, and older are now transferring their wealth to the younger generation. Some of them are doing this willingly, so they're actually giving up around $5 million to their kids and grandkids. Some of them are doing it because they absolutely have to, like they die unexpectedly and their estate and the rest of their assets are then divvied up between their family. But here's why we started with the whole GDP thing at the start of this video. That $35 trillion is equal to around 157% of the entire United States GDP. So it's larger than the United States is actually putting out every single year, at least right now. That is more than double what we saw 30 years ago. So Americans who are 65, 70, and older hold a massive amount of wealth, and that wealth is about to be trickled down to who else? But millennials. And actually, it's already started because between 2018 and 2042, this $70 trillion is going to be passed down to younger generations, which means millennials are about to receive hundreds of thousands of dollars, if not millions of dollars from their parents or grandparents. That could have some massive implications on our economy both today and in the future, and we'll get into those in just a second. Now, the actual years for millennials are kind of up for debate between a lot of experts, but essentially, if you were born between 1977 and 1995, you're pretty much considered a millennial. So think about it. People who were born in even the early stages of that, like in the early 80s and late 70s, are only in their 40s and early 50s today. They still have a very long time to use this wealth to their advantage. And what do people typically spend their money on? Well, anything that they want, like a house or other assets. Surely you'll have millions of Americans and millennials who are going to spend this money. However, not all of them are. They're going to go out and invest a chunk of this change. And if invested correctly, this hundreds of thousands or millions of dollars could make the following generations even more wealthy. Because of baby boomers, we potentially could have more wealth today than we have ever seen in the United States before, and that might continue for a long time. And that $70 trillion is not even everything that we know about. Experts believe that there's still possibly trillions more that we just don't even know about because it's not reported to the IRS and won't be for some time. That sort of under the table money is going to be given too, but in a less traditional sense. So right now we have a bunch of Americans and millennials who are getting financial assistance from their parents. Not every situation is like this, but some millennials are getting money from parents or grandparents in order to buy a house or a car or something else like schooling. All of that is wealth that's being used from baby boomers, and it's not really measured because it's not sitting in an account like the rest of that $70 trillion. Now, what exactly does all of this mean? So you heard a ton of different numbers there, and basically the gist is that baby boomers are giving up their money to both Gen X and mostly millennials. The first thing that means is that Uncle Sam and President Joe Biden are going to get a cut of some of that $70 trillion when it's eventually passed down. So when we say $70 trillion, that's in assets or other holdings like savings. Depending on the asset, it's going to be taxed at a different rate. So basically, if it's in an investment account and it's directly passed down, that's going to have its own capital gains tax rate. However, if it's tied up in some sort of other asset like a yacht or a house, then it's going to be taxed differently. Basically, President Joe Biden and his administration are seeing this generational wealth transfer and are trying to tax it a little bit more. That way they have money for a lot more of their programs like the Build Back Better bill and the infrastructure bill. And this comes down to how generational wealth has traditionally been passed down in our country. So basically, if your parent or grandparent owns a lot of stocks, bonds, and real estate, and those assets have appreciated in value over time, no capital gains tax will be assessed on that until they are sold. So basically, if your parent owns a $10 billion home, for instance, and they pass away and you inherit that home, well, you don't pay any taxes on it unless you sell the home. However, under a new Biden proposal, that would completely change. So in the year that your parent actually dies and you inherit this property, well, you're going to have to pay taxes on it no matter what. I will say here that this is exempt up to $1 million. So unless the asset was worth more than $1 million, then you're pretty much okay here. However, if it's worth $1 million plus, you're going to have to pay taxes. And this new Biden proposal would actually raise the capital gains tax rate from 23% all the way up to 43.4%. So basically, the United States government is going to get a massive cut of this generational wealth. Now, none of this has been passed yet. All of that is just a proposal. And it's still moving through Congress, and it's likely to be scaled back. But even after all of that is said and done, millennials are still going to be receiving millions of dollars in some cases. But here is where things get interesting. Just because you're given hundreds of thousands or even millions of dollars does not mean that you're going to keep it. So where is all of that money going to go? Well, around 70% of wealthy families actually lose their wealth by the second generation. And around 90% of that wealth is completely gone by the third generation. So it's continually spent more and more. Now, this wealth spending could actually be really good for our United States economy because of how our economy works. For our economy to grow, going back to that GDP idea, we need a lot more money. So as more things are created, there's a lot more money because people are buying more. And if you have trillions of dollars that are being sat on by baby boomers and not being spent, well, that's $70 trillion that is not flowing through our economy. But that is about to change. There is a potential for millennials to take this $70 trillion amongst the entire generation and go out and spend it. If that money is spent, well, you're not going to see a generational wealth transfer from baby boomers to millennials. You're going to see a generational wealth transfer from baby boomers to millennials to everyone else in the country. Think of it this way. If millennials are buying a bunch of stuff at different stores or going on lavish vacations or buying vehicles, that money is going to corporations and companies and businesses all throughout the nation. If that money is given to thousands of different businesses, well, now they can grow and expand and start hiring even more people. We are seeing right now the Great Resignation, which means people are actively and voluntarily quitting their jobs because a lot of the jobs out there right now are trash and tragically bad. Nobody wants to do that kind of hard work for super low low wages anymore, especially with inflation going up and up. So people are quitting their jobs and they're looking for new jobs that are way better and suit their lifestyle and pay more. However, that could create a situation where eventually those jobs disappear, because if nobody's willing to do them, then automation is ultimately going to take over. Corporations still need those tasks done, and it makes more sense to create a robot to do it than to try to continue to hire more people. So now these corporations and businesses are creating jobs, but they're not the jobs they used to be. They're much more high skill and higher paying. So we could see a lot more of this money go to bigger populations in the United States on top of the tax benefits that come through. But that's if millennials actually go out and spend a large chunk of this change. But what if they don't? What if millennials actually invest this money and become richer than any generation in not only American history, but human history? Well, that's a possibility, because right now we have seen more millennials and more people start investing than we ever have. There are more beginner investors and more avenues to invest in than the stock market has ever seen. So we could see millennials start to invest this money, not only invest it in stocks and bonds, but invest it in riskier assets like cryptocurrency. Cryptocurrency has exploded over the last 2 years, and part of the reason for that is because there's been so much money in our economy. Investors tend to get pretty risky when you give them a ton of money, especially if it's not their money to begin with. They don't care if it gets lost. It's basically like if I gave you $100 in a casino. Well, if you gamble away that first $100, it's no big deal to you because you didn't start with anything to begin with. That could help the cryptocurrency market to explode over the next 20 years. And I don't mean explode past 100K like a lot of experts believe. I'm talking Bitcoin could reach the $3, $4, and even $5 million value mark. That basically means one Bitcoin could be valued at over $3 million plus. And millennials are going to invest in the things that they want to see during their lifetime. I mean, pretty much every generation has done this, but millennials haven't had the capital to do it. Millennials are more in debt and have more money issues than any other generation pretty much combined. And there's a lot of reasons for that, which we can go over another day. But the bottom line here is that once millennials pay off that debt, they're going to start investing, or they could start to invest. Invest in businesses or create a business themselves. Invest in their education. So we might see an even smarter and more educated society in general over the next 20 years. And literally invest in their area. So wherever they live, they start investing in small businesses, or they start investing in parks, or even other environmentally friendly projects. So the world could literally grow simply because baby boomers are finally giving away that trillions of dollars that they've been sitting on for years now. And they don't really have a choice. They have to give this money away because they're not going to live forever. What actually happens to our economy is going to depend on what the millennial generation actually does with this cash. If millennials decide to just sit on this money and do a passive investing strategy, then, well, not really much is going to change. I mean, that's what the baby boomer and Gen X generations essentially did. They invested their money and they didn't really care what happened to it for several years. They were long-term investors. Millennials, for the most part, haven't really had that opportunity because, like I said, they are swimming in debt. So they haven't been able to really invest like they've wanted to yet, but that might soon change. Money essentially keeps our economy going. So if the millennials decide that they want to spend a lot of this money, well, that could mean that money goes to a lot of different pockets in the United States that it hasn't really gone to before. That could mean that not only Gen Z get a ton of this cash, but just Americans in general might start seeing the benefits of this money start trickling down. But using that money, which means spending, means that we could see our inflation problem continue to grow as more people have more money. And that's outside of what the Federal Reserve can actually produce. That in itself is a problem, but it only becomes a big problem if Americans don't have the money to buy things, which is what we're seeing right now. But this wealth transfer could completely change that. But now I want to hear from you on this issue. What do you think about about this historic generational wealth transfer in the United States that's happening right now. Do you think that it will lead to economic prosperity over the next 2 years, or do you think that somehow all of this money trickling down is actually going to tank our economy? As always, whatever your thoughts are, leave a comment below before you go. That is it for me, everyone, and I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.